All right, so today I wanted to make a quick video on a handful of stocks that I am going to be buying within the next week or two, most likely. I'm selling off one of my large positions, so I have some money to spare. Again, I'm not in a huge rush to get into some of these companies, but all of these are pretty significantly below their historical valuations, and that's why I'm looking to get into them. Now, for starters, I would say you never want to buy just because some Joe or even Warren Buffett, you name the guru, is buying, right? So again, obviously everything here, my opinion. I just want to talk about some companies that I really like. So the first one is Visa. I think Visa has been an absolute home run if you own it over the last decade or two. I don't think we're going to see the same levels of growth over the next decade or two, but this is a company that has crazy good margins, and not only that, very nice dividend growth. I mean, they're growing 16% per year, right? Again, they only have a 0.8% dividend, but again, if they're growing at 16% a year, that's what really matters, right? I mean, if you look at the growth here, very good. Profitability is where this company shines. Again, just absolute out of this world profitability, right? I mean, operating margin 67%, free cash flow margin 58%. Those are just out of this world numbers, right? Again, management's doing a very good job. But again, the most important thing here is price to free cash flow of 25.65. That 5-year average is 32. That's about 20% below that number, right? PE, 15, almost 16% below the historical average, right? So again, that is why I'm looking to pick up Visa, right? That's why I'm looking to pick up Visa. Again, preferably I'd like to get it a little bit cheaper, but again, I still think you're getting it for a solid price right here, even though it's not far off its all-time high. I mean, I believe its all-time high was in the 250s, right? So again, it's maybe 5 to 10% off that number. But again, this is a company that's growing very quickly still and has crazy good historical returns, right? So that's why I will be picking up Visa. Again, not 100% for any of these companies, but all of them very likely. The next one is ARLP. Again, this is a company that's actually ran quite a bit recently, but again, its 52-week high is 25. Again, look at the earnings yield on here, 26%, right? Again, it's got a dividend yield of 13%, right? Again, if we look at the insights here, let's check out the insights. Again, that payout ratio, 50% with a 13% dividend. Now, again, do I think it will maintain that over the next decade? Probably not. But again, you also have to keep in mind that it has a 26% earnings yield, right? That still gives it a lot of room to pay down debt, to grow, to buy back shares, like whatever it needs to do, right? So I don't, barring a crazy drop off in oil prices, I don't think that the dividend will go down at all, and if so, probably not by much, right? Again, growth, it's still growing very nice too, right? This is another thing that a lot of people miss with some of these higher dividend, whether it's BDCs, MLPs, you name it, right? Is that they see this nice juicy dividend, but they're ignoring the fact that a lot of these companies are perpetually issuing shares, they're diluting, they're taking on debt, they're not growing. Again, you want to be, the main focus needs to be the business, right? The dividend's irrelevant if it's a bad business, right? So again, that's a very important thing. Again, profitability, very, very good, right? I mean, return on equity, 31 or 40%, right? Price of free cash flow, 3.85. PE, 3.8. Those are both significantly below their historical averages, right? So again, that's why I like this company. The next one is going to be Microchip Technology. Again, this is one that my only concern is the technicals on this one. I mean, it is below the 50-day, 20-day, 200-day moving average. That's something that I think is a little concerning. But historically, this company has performed exceptionally well. And I don't see anything in the technicals look bad. The fundamentals look very good. I don't know if I misspoke there, but the fundamentals are very, very, very good here, right? I mean, the dividend is growing 17% per year. The current yield is just over 2%. And again, this is a semiconductor company with a dividend yield of over 2% that is growing at 16, 17% per year. Payout ratio is only 37%, right? They're going to be able to grow that, still going to be able to grow that nicely over time. Look at the growth. Very, very good growth. Profitability, extremely good as well. Management's doing a very good job, right? Look at the historical average. This is a semiconductor company that has a price to free cash flow of 12.7, a PE of 17, right? What is there not to like about this company, right? Again, the only thing, like I said, the technicals don't look good. But again, over the long run, I think it'll be fine. And the last one here is APH, Amphenol. And this is another company I've talked about quite a bit before. I like this company because it provides a little bit of diversification. I think this is an area that's going to do well. Again, it is below its historical valuations, which again is a must, or almost always a must for me to be buying, especially significant portions of a stock, right? I mean, if you're dollar cost averaging, very, very small amounts, maybe I will ignore small times where it's above its valuations. But if you're going to be investing, 1, 2, 3, 4, 5% of your portfolio at any given time into a company, you want to make for damn sure you're getting it at a discount, preferably, if not fair value, right? And I think all of these companies are at a discount, in my opinion, right? Again, the financial health is solid. The growth is solid. Neither of those are crazy good. The profitability is good. But again, the main thing here, the valuation's right where I want it to be, right? You want to get it below. And again, the dividend 1%, but they're growing at almost 13% per year. Payout ratio is only 25%. So again, that's why I like this company. Again, like I said, I think they're in an area that's going to do very, very good, right? Very good over the next decade or two. And that's why I like it. So anyway, those are 4 companies that like I say, most likely would be buying over the next couple weeks to a month. I will keep an eye on the prices, but all of these are companies that I would be confident in buying basically where they're at right now. So if you like the video, please like, comment, subscribe, all that good stuff.